From the floor of the CME Group, this is Danny Riley on today's Cash Clues. Ooh. Yeah, I do get excited about this. And the name of this video, traders, the S&P 500 futures, the PitBulls Thursday, Friday low, and turnaround Tuesday. Shortened week, you know, they had to jam them good today. The high of the day in the S&P came at 1892 even at 1:30 Central Time. The low came at 1870 quarter at 10 o'clock Central Time. And last were 1889 half were up 31.25 handles. Total volume, 1.3 million minis traded. It's lower than we've been seeing lately. I think a lot of people took some time off this week. And 3,000 big S&Ps traded in the pit. MOC, the MIM had it like 250 million to sell, gradually went to a flip, and the actual MOC came in by 320 million. Tomorrow we have the MBA mortgage applications, we have the housing starts number, a lot of housing numbers this week. We have the PPI-FD, we have Redbook, we have the industrial production number, we have the Atlanta Fed business inflation expectations number, we have the e-commerce retail sales number. We have the FOMC minutes. Those could be something. And James Bullard from the Fed speaking. Tomorrow, you know, look, the markets are kind of running out of steam here. I think what's happening here is it's a big dead cat bounce, but the big question is the S&P making a bottom? Is the low in? I don't know. I don't think so. But that said, that doesn't mean that the S&P can't go higher. A lot of people are starting to talk as high as, I mean, first let's talk about the levels that I've got. The levels that I'm looking at, I think are key right now is the 1886 level, right, kind of where we're sitting right now, the 1910 level, the 1920 level, and then the 1950 level. Those are all going to be critical resistance on the upside. A lot of people starting to talk that the S&P could even go to 20 even or higher. But I got to ask, do you really think that China is just going to be all okay? Everything's okay there now? That everything's just going to be forgotten? That everything's going to be okay with the Fed raising rates? There's no inflation problems. You know, crude oil's back on track to go higher. There's no problems there. I think there is problems there. And although the Russians and the Saudis may have a freeze on production, the Iranians are going back online. They're delivering crude oil already to France. They're not going to buckle up. They're not going to take no for an answer when it comes to selling crude. They're going to dump crude, and that's going to continue to be a precursor to the downside, I think, in the oil market. I don't think that's over. Therefore, I don't think any of this is over. At the end of the day, we've had a good bounce. We had a double bottom at the 1804, 1803 level. We've had a bounce up to 1898. Kind of struggling here above 1890. My guess is that there's probably still more on the upside, but I still also think that this is not over. The other part about it is the January expiration stats were good today. They're up 22, down 10 of the last 32. Wednesday and Thursday are 16 up and 16 down, flat. And Friday is the worst day of the week, up 14, down 18 of the last 32 occasions. So we've had this bounce pre-expiration. I think you're going to have a real catalyst to keep pushing the market higher here. And I don't know what that's going to be. We're going to leave it like that, you guys. I'll see you tomorrow on the opening print.